Oh yes, guys, we're back. As you can see, we have the DCA crew here. We have a lot to discuss. We have the Japan potentially going all in on QE again. We have all kinds of things happening in the security space within the Ethereum landscape. Hacks, Viper programming language not being secure. We have DXY strength that we're going to be discussing. And most importantly, the Bitcoin price, because it is a stable coin. It doesn't want to go down, and it doesn't want to go up. So with us today, as always, we have CTO Larson, James from Invest Answers. How are you guys doing? Over to you, CTO, to begin with. Tell us about you're somewhere not where you usually are.
Yeah, any guesses?
Good morning, Vietnam. Whoops.
That is correct, of course. We spoke before, but that is correct. I mean, Hanoi, Vietnam, you catch a glimpse here behind me. And that's why this time slot is so good. It's a little bit early for James, but it works in Pacific time, Eastern time, Europe, and it works in Asia. So our Asian guests can tune into this show as well. And there's a lot of crypto interest in Vietnam, much more than maybe many people would guess. But you go out on the street, ask people, they definitely are involved, and they know a lot.
What about you, James? How has the weekend been, and how are you doing in your crypto journey?
Good. Well, it's the summer slumber. You know, July and August are always quiet, and we're seeing that. So everything is as expected. Things are good. Everything is good.
Yeah, and maybe
happening too.
And maybe let's start with that. Let's look at the charts to begin with. CTO, I know that you always have some interesting insights about the charts. So we can start with the Bitcoin chart, then we can take a look at the macro picture to give us a bit of a backdrop. And then we can go into alts, into ETH vulnerabilities that we have witnessed. We also can discuss layer 2s and things like that, because we did see the Coinbase layer 2 base become active, and people already pump altcoins and rug themselves, as a Bold coin just rugged before the stream, and it went up like 40,000% during the weekend, but now it's rugged. But yeah, let's start with the price. CTO, what are we looking at right now?
Yeah, there's a few very interesting things. First, if we zoom out, the picture is that we're right at this multi-year resistance, as we can see here, and we haven't really punched through. And now the market is hesitating. Are we going to punch through, or are we going to, reject, consolidate below, and make another push later? And the answer to that question isn't really in the Bitcoin chart at this point, because if anyone has paid attention, is that the movements are so small. They have been so small. We've been in this small range. Now we broke that down a little bit, but all these movements the past month or more than 1 month has been completely determined by the macro charts, by the dollar strength index and the 2-year yield. So you can basically see if this one goes down, Bitcoin goes up that day, and vice versa. So you can, you don't even need to look at the Bitcoin chart. If this one goes up tomorrow, Bitcoin has gone down. If this one has gone down, Bitcoin has probably gone up. And these charts are hesitating also. Is this one going to break out? Is this yield chart going to break out to new highs? Okay, then probably Bitcoin isn't going to rally this, this time around. It's going to consolidate a little bit further until this one really has topped out and starts going down again. And same with this DXY. This one broke down. Then we got some strength in Bitcoin, but now it has recovered. It's back in this range. And then Bitcoin has dropped out of its range in response. So the answer to the question is really, right now, nothing to do with Bitcoin. It's determined in these charts. That's why it's so interesting. And it's so interesting to talk with you two here today, because that's really what we need to understand. Where is the yields going? Where is macro going in the short term? This doesn't change my long-term view. The trend remains up. Nothing has changed. But if we're looking at short-term movements, it's really determined by these macro charts.
And if we look back, CTO, on your chart, if you go back to 2019, when we had also the year before the halving, and we did go up quite a lot there during the summer. Yeah, there. I think many people get a bit of PTSD now that we're kind of repeating their June, July, one way of looking at it in 2019. If you look at that scenario, yeah. If you go to the left, there when we reached the local high, and then we were sideways before it went down, and there you could say it was also mainly because of macro events with the zombie virus and all of that. So what do you guys think? Let's start with CTO first, and then we can go over to you, James. What do you guys think is the chance of this scenario where Bitcoin goes up for half a year and down for half a year, like Ben discusses on the Cryptoverse? I think he just did a video about that. And I really like that he said it, like, it's up for half a year, down for half a year before the halving.
I think there's one more clue. Short answer is that I don't know. I don't know if it's going to break down now or if it's going to go down and then up. But there is one more clue apart from the macro charts, and that is the gold chart, like the old gold, the traditional old style gold, because this chart is very interesting. And it's kind of formed this cup and handle formation. And you can see that it's bumping up here against this resistance. If this one breaks out, there's not a trader in the world who will not, see this. And I think that if that happens, then Bitcoin is going to break out too. Because, it's a digital gold. They have moved in correlation during big periods. I don't think it's Bitcoin against gold. I think it's Bitcoin and gold is going to move together. So if this chart breaks out, okay, then maybe it's time to really, throw everything at Bitcoin. That's what I'm thinking as well. But at this point, I think it's just guesses if this one is going to break out now or later.
Over to you, James. What do you think? And maybe you can also segue into this macro picture that we started on, but we haven't mentioned the Japan news. It would be interesting to hear your opinion on what happened.
Yeah, there's a lot to cover because you guys touched on a lot of different things. Let's go back first to the beginning of 2019 and how there was some stuff going on in 2019 that did impact crypto and markets. There were huge trade tensions between US and China. Central banks were playing with interest rates. Tech sector was kind of weak at the time, and it brought the markets down. So risk assets went down, and so did Bitcoin. There was also concerns over a recession, and we're talking like Q3, Q4 of 2019, right before the C19 hit. There was a lot of political events. Brexit was going on. There were impeachment proceedings against the US president at the time, and global economy showed signs of a shutdown. There were already the lockdowns happening in China and places like Wuhan. I was on the phone with people in Wuhan in December 2019. So it was actually a good time to be on the phone with China actually at that time. So that's kind of what happened to the chart. So it's very difficult to make a parallel between late 2019 and where we are today, and also what happened in March 2020. So always bear that in mind when you look at those charts. Don't expect them to repeat. A lot of people maybe sometimes do. All right, so where do you want to go next? Another thing that's kind of interesting, if I could share regarding kind of Bitcoin price, which I probably think is most important, is this little chart here. I don't know if you guys can see that.
One second. Let's see.
Pop that up. Yeah, this is the short-term holder cost basis, and it's been behaving very interestingly so far this year. Just as a reminder to the folks out there, the short-term holder cost basis is the average purchase price of Bitcoin for the short-term holders under 155 days. And this helps distinguish between bull and bear markets. Now, if you are above that short-term holder cost basis, it's a bull market. If you're below it, it's a bear market. It's kind of one of the simplest charts to decipher using on-chain data. Now, the chart, the top part, if you look at, we've been bouncing off that green line, which is the short-term holder cost basis, which is critical. So every time it gets close, it bounces up. And that's a Z-score from where we are. And the other key thing, and the reason I look at this so much is because when we know we're going full bull market, that's typically when the short-term holder cost basis surpasses 1.5 standard deviations above. All right. And then it's rocket boosters time. But bouncing above that is critical. And that keeps us between that kind of 28.5 level, above the 28,500 level. The short-term cost base, I think, is 28,300 right now. And that's the key level to watch for us. And if we get anywhere near that, it's worth nibbling on Bitcoin, in my opinion, not financial advice.
And what about the macro situation, the way you see it, James, currently with the central banks, with the hidden QE we've seen during the spring, with the bank crisis, which we have been covering, and the potentially now what's happening in Japan? It would be interesting to hear your opinion on this as well.
Well, there's another cool chart. It's kind of global liquidity. I don't have it handy, but I can pull it up later if you guys are interested. But that's actually peaking up. So on Friday, there was a lot of kerfuffle about the Bank of Japan. And they said, okay, we're no longer going to do YCC, which is yield curve control. And that is basically stimulate to keep interest rates in a certain range. And they said they're not going to do that anymore. And then less than kind of 48 hours later or so, the Bank of Japan is launching a $2.1 billion emergency bond buying, literally 48 hours after backing away. And why does this all matter? Is because, a lot of people, global markets were concerned about yield curve control in Japan. Why does that matter? Why does anybody care? Well, they've been doing it for a long time, a very long time. And it rattles global markets from a treasury perspective, because if if Japan lets rates flow free, it attracts money from other markets, and the treasury could lose its marginal, potential and the ability to sell treasuries, which they need to. And the US itself is also kind of doing some version, you could argue, of yield curve control, because if the US wasn't as active as they are, you've noticed the M2 money supply increasing. You've noticed that behind the scenes liquidity pumps with the BTFP bank liquidity that they're doing, and all the fancy stuff they're doing behind the scenes, the reverse repo. This is all keeping the rates down, because if you technically listen to what the Fed are saying and you look at the actual rates themselves, they're under where they should be. Technically, the short-term rates, 1 year, 2 year, could be at 6 or 7%. If that were to happen with the $33 trillion that the US owns, half of which is rolling into a new rate very soon, like half of that was at 16.5 trillion dollars will be rolling into 5%, 6%, 7%. It's going to completely explode the deficit of the US. And that's the big issue right now. So basically, as I always say, it's real simple. Central banks are QE to infinity. It was almost a comedy show what Japan said on Friday, and then immediately reversing it 48 hours later. And that's all people need to know.
Yeah, but do you guys know, is it because the interest rates started to go up a lot on the bonds during that time? As soon as they said it, that markets reacted instantly and they had to backtrack. Yeah. Is that what happened?
Pretty much.
That's crazy. Yeah. Okay, then that's how I understood it as well. And like you say, James, the cost of servicing the US debt is right now bigger than the defense budget just to pay the interest rate. Yeah. And as the Fed and other central banks, as they try to keep this hawkish marketing up, you see that it's impossible. It's a game of chicken, because the economy is debt based, and so if the interest rates go up, it simply doesn't work. It doesn't work, and also they have a danger of deflation if they keep it if they keep pushing it too much, and then it definitely doesn't. Then the economy definitely doesn't work, because if your debt is becoming more expensive by the day, the debt-based economy is definitely is not made for that. So I think that we're on the right. We positioned ourselves correctly here in the crypto industry overall, and each and every day we kind of get a confirmation of that. Sorry, James, you were saying?
Yeah, and that's the interesting thing about kind of Bitcoin and why it's such a peculiar asset, is because technically deflation is the kiss of death, because it prevents anybody from making any decision or spending any money. So it smashes economies. It also makes servicing of debt very expensive, and it's really bad for GDP growth. So for the US to sustain, and any other central bank around the world, they need the GDP to keep on going up, and they need to kind of deflate debt as they go. It's real simple. But once deflation kicks in, wow, that is a really, really bad situation. But it's also beneficial. Deflation is beneficial for Bitcoin, and so is inflation, because it's in a class of its own. So it's a life raft no matter what the storm is out there.
But why would that be?
Maybe we can add one thing here to really emphasize the point. If I can share my screen again. If you look at the stock market.
1 second. There.
So if you look at the stock market, I'm sure you guys remember a couple of weeks ago here, we pointed out that something interesting had happened in the stock market. This is S&P 500. And as you know, this was basically a straight line up all the way back from the financial crisis in 2008, 2009. The trend was up the whole time. But then the trend actually turned down here in September 2022. And then it was like doomsday propaganda. But what happened in the market was that the big players were actually buying, because as you can see, this is a head and shoulders pattern, which is a kind of revealing what the big players are doing. They're trying to buy, but without impacting the price too much. So it doesn't start running up until they've finished buying. Then when the neckline breaks, typically the price runs up quite a lot and quite fast. And that happened here in June. In late end of May. And trend turned up in beginning of June. And as you see, this has just continued going up since then, since we talked about this a month ago. And it's still going up. This still looks like a very strong chart. There is no real resistance here, maybe until all-time high. So the stock market is still reacting positively, still going up. And that's worth noting, because that's also a risk-on asset. Stocks are risk-on, just like Bitcoin.
Yeah, that's very interesting. And that's the whole idea with looking on the chart and instead of listening to the media and listening to Twitter and so on and so forth. And there's many times where you CTO, you could point out significant changes in the market based on your indicator and the bottom formations and so on and so forth, while in the media it was doomsday and while Twitter was doomsday as well. So basically, to summarize, Larson line still yellow on stonks, meaning that overall investors and whales and institutions are bullish, and we do have a bottom formation in the stock market.
And what's important to remember is that this is measured in US dollar, and since dollar can keep losing value forever, the stock market can go up forever, and probably will.
Exactly. James, I'm curious about what you said, that both inflation and deflation is bullish for Bitcoin. I mean, in the sense that deflation just wrecks the entire economy and is very destructive. Is that what you mean, or what do you mean? That deflation is good for Bitcoin as well?
Yeah, so it's real simple, actually. We know it's a so-called inflation hedge because it is technically a deflationary asset, but that's one element. The other thing is, when it is a deflationary environment, it encourages savings. So when prices are falling, people are more likely to save their money and park it somewhere. And this increases the money flow into things like Bitcoin. And also, deflation can make Bitcoin more attractive as a payment method as well. If prices are falling, people are more likely to be willing to accept Bitcoin as a payment, so it'll drive more adoption as well. So it's a bit of a twist compared to the kind of inflation hedge that is Bitcoin, but that's kind of some of the simple reasons out there as to why.
Makes sense. Okay, guys, let's take the next topic, which is about the security problems we're seeing right now in the Ethereum ecosystem. Just today, we did see Curve getting hacked, and some of it has been returned because it was taken by white hat hackers and also by MEV bots, but some of it is not. Also, we've had a bit of a problem with Aave stablecoin depegging for a moment, which again highlights a bit of a problem with this algorithmic stablecoins, that you do have a smart contract risk, and sometimes that risk is very real, like we've seen. Have you guys been following the details of what happened with the compiler and Viper language and so on and so forth?
I read little about it, but I think overall it's really, we talked about it 2 weeks ago, right? We talked about yield, if we stake or not, and I think that this really illustrates what we talked about. You know, is it really, if you have 5% yield, that's like saying nothing will go wrong in only once every 20 years. That's when something goes wrong and you kind of lose the money. Is it only 5% risk that something goes wrong? I don't think so. I think it's much higher. That's why I feel that the reward that we need to get to take a risk like that is not 5%, it's not 10%, it's perhaps not even 20%. And that's why I feel that maybe, you know, trading and so on is better, because you have a chance to make 100% or 50% or thousands of percent, something that makes it worthwhile to take the risk. But I feel that staking for 5% in something with this much complexity, I don't think so. I have having nightmares almost about the complexity monster that the whole Ethereum ecosystem has become. I'm not sure any one person can even overlook everything anymore. And it just takes one small bug.
And that's an interesting new type of bug that I haven't seen before within the ETH ecosystem, and is the fact that you cannot really trust the compiler, because what happened was that the team has written everything correctly. The code is fully correct, everything is fully correct, all audits are fully correct. But what happened was that they used the Viper programming language in order to compile the code. So they wrote it in Viper and compiled it to bytecode using Viper. And Viper is like a smaller programming language that many people like within the Ethereum ecosystem, but it's way smaller than Solidity. And Solidity has many eyes on it. Many security researchers, many devs use it every day, develop the compiler every day. And Viper, just by the virtue of it being smaller, it has less eyes on it. So because of that, they did have this security flaw with the code not being compiled correctly into bytecode. And because of that, the protections developers put in place for something called reentrancy attack was not respected, because there is supposed to be a feature of the programming language that protects you against reentrancy in Viper. But the devs had put it in, but it was not respected on the compile level. So it's kind of like, the comparison is, let's say that you write some kind of software on your computer, but the programming language is not respected. So that's kind of what happened. And this can, I mean, everyone is susceptible to this, especially if it's a small ecosystem. And it also creates this important risk of composability, because we all love composability. You can have DeFi and then it interacts with other DeFi, all these Lego blocks. But as soon as you have one part of your composable DeFi ecosystem in some way flawed, then it opens up big risks. And that's going to be interesting to see how it plays out moving forward. If people will still be using many different programming languages, or if we zero in on using one, which is Solidity in the Ethereum space. So yeah, that's a short summary of what happened.
This is not really specific or unique. Sorry, this is not unique for crypto. I mean, in telecom and so on, we have those kind of problems as well. That, you know, there's something wrong in the compiler, and you basically, someone has to sit and look in the individual registers on the processor almost to figure out what is going wrong, and because there can be errors in all kinds of places. And the only real solution to this is exactly what you say, Ivan. I think that in the end, it has to kind of come into a mainstream where there is a lot of people using, a lot of researchers, a lot of programmers, and the bugs kind of surface quickly before they become critical and worth millions or billions or even more. And otherwise, this will keep happening. Just looking back at the past 2 years, what it is that we've had in DCA, how many different types of accidental bugs there has been, where everyone have the best intention, they have been careful, but it's only humans in the end, and there's some mistake, and one mistake is worth so much money for these hackers.
And what's interesting is that even though we have all of these problems, people still degen and they use and they still deploy capital. So while it is a big problem that we have to solve, the fact that we're still growing shows massive product market fit of this industry. If you want to see glass half full, that's how I would like to see it, because we have all the issues, like when it's like a minefield when you use this stuff, all of these different websites. But the financial freedom is so great. You have access to the financial stack. You have admin access to it. You can create your own things, launch your own things, and that's fantastic. So I don't think it's a big thing overall. It is just another one of the hacks that help us. But from a personal risk management perspective, this is a very big lesson, as always, to not take too much risk. And trading alts, that is likely where you have good upside and limited risk, because you yourself decide how much you trade. But if you have some kind of yield earning thing, normally people put a lot of money there, way more than they would put into altcoin trading. So because it's just, the more you put, the more yield you have, and normally this yield is not as big as when you trade alts. So you want to maximize it by putting a lot. James, what's your thought on this thing?
I read, going back and forth with you guys last night, I was reading a lot about it yesterday, because Curve has been around a long time. It has, 1.62 billion in TVL. So it is big, it's well established. And one of the crazy things is, it's such a simple exploit. And one of the problems I have with kind of ETH and how much is built on top of ETH with so many different variations, so many different technologies, so many different players. And you mentioned having eyes on everything is impossible. But that reentrancy, I never heard of a reentrancy malfunction before or vulnerability until last night. And it affected, what's interesting about this, it affected many DeFi projects.
Oh, yeah.
Like Ellipsis, Alchemix, JPEG-D, Metronome, tons and tons. And they took 50, 60 million. It was 204 million, I think, at one stage. But Curve was also hacked in August 2022 as well. People may forget that. And that's kind of the crazy thing. So I don't know where all this is going. But if, as I always say to people, if you're playing with DeFi, get on, do your business, and get off as quickly as possible. Don't hang about and don't park a lot of money on there. And I like what you say about swapping, moving one asset to another. Pair trading is a big part of what I do for a long time. So I do like that advice that you gave. Not financial advice, of course.
But what about, because I know you're the Solana support crew in the show. So what kind of, because we do see sometimes hikes there as well, but your feeling is, do you feel that it's more safe there or less safe, and is it because of the technical aspects, or is it just because it's less activity there overall? Like how do you, because I think you're the most active out of all of us on Solana. How do you feel about that?
This goes back to, I am not a technology software person like you. I know software from an investment perspective. I do a little bit of coding, but one of the simple things in my brain is when I look at modular versus monolithic architectures, when you have modular, there's way more attack surfaces, no ifs, ands, or buts. And that I've always had a problem with. It's also less efficient, less effective. So I'd like to pass the question back to you guys. And we've talked about this before, but we don't have an answer. What is better? But from a risk perspective, so for example, CTO, if you're building a global telco infrastructure, 5G, do you want 500 attack surfaces or do you want one?
Exactly. Yeah, so I think it's spot on, and both of you are completely spot on. I think it's important to realize that complexity is an enemy, and it is an important consideration, because if it gets too complex in something like this, which cannot have a single critical error, that is a problem. It's a huge problem. And I think it's maybe the biggest risk for the whole Ethereum ecosystem. It has gotten really complex, and it's getting even more complex, adding layers, adding a lot of new functionality. And then the level of complexity building on top of this makes the entire ecosystem really, really complex. And we talked about that. I think the first time you and I spoke, James, years ago, I said that about Solana. I liked it because I feel that it's like a simpler model. You get that one thing working, and if it's really working, there's less complexity in it. It's harder to get it working, but once you have it working, it's like kind of less complexity in it. And I think that is really an advantage of that. At the same time, as Ivan said, we humans, we have proven that it's possible to get really complex software to work. Telecom is one aspect. There's much more software than people realize, but the criticality is not as big. The worst thing that can happen is that, okay, the network goes down. That's really bad, but then we fix it and then it's up again. But it doesn't happen very often. And okay, people couldn't make phone calls. They're really angry for 10 minutes, but maybe that's it. Here it's like, okay, $50 billion went up in smoke. That's not good. Then no one's going to dare to use it
and
ever
it's like,
again,
oops,
right?
oops, it's just like a blog post we messed up, guys. And the next day as nothing happened. That's the craziest thing with crypto.
So I don't know how much was it this time. It's like,
yeah, it wasn't that big this time.
Like
but
tens of millions of dollars. Imagine if this is like, okay, it was 500 billion because the world's economic system is running on this protocol, and the country of Finland has lost all their money now or something, to North Korea. I mean, it's just that we're not ready for prime time in that sense yet. And that's why I think that looking at this from a half full perspective, and it's one reason why I try to be less sure of myself, because it could be that the protocol that we will all use in 20 years, and that all the countries of the world and all the businesses are using and relying on every single day, and nothing ever goes wrong. Perhaps that's not even invented yet. We don't know. I mean, it could be like a fork of one of the current protocols or something completely different. We don't know for sure, because what we have today is not ready to handle the world. It isn't. We're still early. This is still a new technology. We're trying to figure it out, and I think we will figure it out. And that's a great thing. We're not done yet. It's not like the last invention, the best protocol has already been written, and nothing will ever get better. I don't think that's the case. I think we don't know yet how this will end, and I like that. I think I'm pro innovation. I believe in human innovation and what we will be able to do with this.
Yeah, and to be fair, like, this is not that much about Solana versus it, because Solana also has been hacked many times. Radium was hacked. You did see Mango Mark is also hacked, and it's just that this nature of new infrastructure, there is all kinds of attack surfaces everywhere, and with time, I think we're gonna solve it. But for the time being, we're the early explorers in this new frontier. So keep an eye on your bags, guys, especially when it comes to this DeFi world.
Yeah. And maybe just to really reinforce that, I think that it's a huge mistake to think like this. Okay, I get 10% yield here, so I'm going to take all my money and I put in that, and then I don't need to work because now I'm getting 10% yield, and I can retire. I think that's a huge mistake, because you could wake up one day and it's all gone. I think it's like the wrong strategy to put all eggs in one basket in something like this. This is not a government bond or something.
Absolutely. Anything else to add on this topic, James, of security before we move on to the next one?
I think it was Vitalik Buterin as well. He warned about bridges being a nightmare.
Yes.
And I think it was actually... Shout out to Sanjay, he shared this with me. It was in the old days, and this may have come from Vitalik as well, or so, I'm not sure who, but in the olden times, robbers waited at bridges to ambush, to steal, pull over wagons and take all their money and everything else. And it's no different today. Bridges are dangerous, and that is, not only a nightmare for Vitalik and Ethereum. So just be careful out there, everybody. And remember, there are thieves at every bridge waiting to mug you.
Yep. Moving on, guys. Let's speak a bit about Elon Musk and what is happening to Twitter, or actually X.com. And he has a massive sign in San Francisco that disturbs the entire neighborhood. Flashing light. I don't know if you guys seen it. This epileptic attack light. But also he's been speaking about that he wants to build the biggest financial institution in the world. Probably, if anyone, he's the guy to use crypto for that, because to me, he seems like a rebel. And whether it is the financial ecosystem or the car ecosystem with Tesla and electric, or with space ecosystem, just the fact that he made reusable rockets work, to me it signals that he's a rebel. And the only way to build a massive institution and to be a rebel is to use crypto. And also, if you think about Mars and going to Mars, the only way it can work is if it is a layer 2 solution. So you can have settlement there in the colony, and then you have all transactions there, and then you settle it on the main chain, whether it is Solana or ETH or something else. So to me, it seems that it's gonna be crypto. Maybe it's gonna be Doge, maybe something else. But I'll hand over to you guys. What do you guys think? Let's start with CTO and then you, James. When will we have Doge as global currency?
Yes, I'm super excited also to listen to James, but I can start. I had a great entry in Twitter stocks. I bought them at, I think, was it 28, something like that. And I was super upset when Elon Musk bought them at, what was it, 54, right? It was about 100% up. But I didn't want to sell. I didn't want to sell my Twitter stock. I felt that this app is like underrated. I spend like a significant part of my day on this app. And I have usually been right. If I like some service like Google or something, it turns out it actually becomes really big sometimes. I didn't want to sell. And now I feel even worse when he's putting these this vision out that this is going to become, the WeChat or the Alipay of the world. These mega apps that is doing everything that has been around for, what is it, like 10 years in China. We're hopelessly behind in the West. And this is it. Yeah, he can do it. I want my Twitter stocks back. So actually, it's a question for the whole community. If anyone knows anywhere, can you still buy these stocks? Is there like an OTC market or something where you can buy, smallish positions of stocks, or do you have to, buy billions of the stock? I don't know. So if anyone knows that, please write in the comments. And then we come to the Doge question, because, Elon Musk always says that the most entertaining outcome is the most likely. And it ties back to something that, Ivan, you always talk about. It's about the community and not the technology. What if someone would take the brand Dogecoin, which is like harmless, not even, SEC is hating on Dogecoin because kind of harmless, is a joke and so on and so forth. What if someone took that and actually fixed the technology, make it better, more efficient in some way, and Elon Musk actually introduced it in this X.com as a payment method? I think I'm not saying it will happen. I don't have any insights. It probably won't happen, but is it a possibility? Yeah, maybe it's a possibility. And I think that the market is seeing that as well, because if you look back, Dogecoin was always this, like, it's fun to pump. It's the coin that was cool to pump. If you look here from 2013 back to 2020, it was just a pump and dump game. Pump and dump, pump and dump, pump and dump, pump and dump. But then something happened. Then there was this massive run up in 2021 when Elon Musk and others started talking about Dogecoin for serious ways, and it had these perfect chart formations. Then it kind of started dropping. People lost interest, but then it built this support. And now it has made this clear bottom formation in the chart, and it's climbed over a key support. This is on Dogecoin versus BTC, so we're kind of ignoring the US dollar. But there has definitely been real buying interest. This chart has put in the bottom formation, it's climbed over a key support that turned resistance, and now it's back to support. So, there is probably people, including myself, who see this. Could it be a possibility that there is some real buzz around Dogecoin and this one does another 10x like it's done many times in the past? So 10x is not so far on this chart. It's somewhere up here. So yeah, 5x at least.
I saw an interesting comment that Doge is going to be the first interplanetary meme coin. If Elon really continues with this, it's going to be the first one. What do you think, James? You're heavy into Tesla and the whole ecosystem. What's your view?
Yeah, well, there's a lot of views on this. First of all, Elon has 30 years in financial services background. He understands how money works globally. Not only from his PayPal experience, but pre-PayPal. He saw the chronic inefficiencies. He worked at a bank as like an intern or something when he was 20 years of age in Canada. And it was like, what? This is ridiculous. And that kind of spawned what is PayPal today. And in fact, CTO, as you said, PayPal hasn't changed in 20 years, but it still works, which is great. But I think, his vision is very like kind of WeChat, the everything app. X has been in his plans since 1999. This isn't a new idea. He's been thinking about this for a quarter of a century, and he knows how chronically broken TradFi is. He knows cryptocurrency and the way it works in the blockchain will be the future of finance. And he said openly that he believes X could run half of global financial services. And that sounds like a stretch, but anybody who has ever underestimated this man loses. And that's why he is also probably one of the most hated people on earth, because he doesn't give a shit. He just says what he wants. He upsets politicians. He upsets mainstream media. He is destroying traditional car companies. Ford, I think, just waved the white flag. It's like, we don't know what to do. Our platform is burning. So have other car companies too. Everything he touches literally turns to gold. And I think Twitter will be as well. And self-admittedly, I've been watching this guy for 25 years. And he's fascinating to me. He is the genius of our time. Love him or hate him, you have to watch what he does and how he does it. The other thing, I think it's very possible because, I'm all about disruption, and that's how I invest. Identify disruption early, get in hard. And when you look at TradFi, I come from TradFi, and you see how broken it is, how it operates. I mean, just try walk into a bank branch anywhere on earth, and you'll just scratch your head as to how pathetic it is. It is ripe for disruption. That's why BlackRock, the biggest financial service company on the planet, is jumping into crypto, because they know they're dead without it. They got to embrace the devil before they shrivel up and die. So I think it'll be very interesting. The Dogecoin thing is a meme. I mean, he does have ETH and Bitcoin already operational on Twitter right now. The problem he has, the biggest hurdle to turning on half the planet, I think there's 400 million daily active users on Twitter. He needs to get to maybe, 2 billion to really make it work. And that's only a 5x from here. So it's easy for him to have the reach of what matters. The problem is regulation and complying with regulation around the world. That's his only hurdle. If he can find a way to do that at scale without going rogue too much, he has it in the bag. So the Dogecoin itself, I don't watch Doge. It is a meme. But I think it'll be something like Bitcoin, ETH behind the scenes.
Elon said one time that it would be, he had a saying for it, I don't remember, but he had like a saying for the irony when the joke becomes the main thing.
Yeah.
And from a financial perspective, CTO, when you say that you are interested in the stock, what do you think about the risk of them going bankrupt, right, like in the coming years? Because the interest rate on his debt, as far as I heard, is quite high. And I don't know if it has been growing with the overall interest rates, but I guess it must be affected in some way as well. But do you guys have been following that? Because I remember listening to Elon when he took over. He was on a Twitter space saying that it's gonna be super tight. That it's the chance is quite big that they're not gonna survive, but that they're gonna make it happen anyway and do their best. So have you guys been following this whole thing with Twitter?
Yeah. So another thing about Elon Musk, he builds a narrative to implement his plan. He's always 10 moves ahead. All right. So first of all, he's reduced costs overhead for Twitter by about 80%. First of all, getting rid of 75% of staff or more, 80%, and also stop paying leases that were extraordinary, cutting all benefits, etc., and rewarding employees with stock options. And he's lean and mean. He's done more development in 6 months on Twitter than they've done on Twitter in the previous 10 years. And that cannot be denied. Also, if I was somebody like Google and YouTube, what we're on now, I'd be actually very worried, because if he can activate things like videos and help creators, there's already taken huge steps into helping creators right now. That could change the game for multiple platforms. And then tying in commerce to that and crypto, he has everything. It's also, as far as I'm concerned, the number one source of real-time news and the number one source of trusted news. Yes, you can find crap on Twitter, but it is way better than any newspaper out there. If I'm looking for something that just happened and I want the latest and greatest, I go to Twitter.
Yeah, it's Twitter. But it's interesting that sometimes it is also fake news, but you still trust it more. Because you can go to another profile to get more in-depth comment, or if you want to, you can just search and see more people reporting on the same thing. So there's plenty of fake news. And also, I just got access to community notes. I don't know if you guys have it, but I have it as like an editor of community notes. So I can go in and edit community or like propose. But actually, the best thing with that is that you can see the proposed community notes. So as soon as there is a big tweet, some big news, now I can go in and I can see the different fact checkers, what they write about this news. And that's super helpful because that gives you so much context. And if you haven't, guys, you should go and apply to be this community notes validator. Just not because you will do it, because I don't write anything, but it's so nice to read what others have written before it's published, because sometimes they don't even publish it. But that has leveled up my experience by, I don't know, maybe 5-10x, knowing if it's true or false. And crazy, people put a lot of time into that, to debunking or or verifying news. So yeah, that's definitely true that he's pushing a lot. Let's see what's going to happen. But CTO, anything from you? Have you been following this debt situation or anything else to add on the Twitter news before we move on?
I mean, looking at the history, of course, he pushed it until the border, right? There's this famous story how he, spent all the PayPal money and Tesla almost went bankrupt, and he was like down to the last number on the last day, and then he turned around, and it's now.
But is that the narrative? Because
so I mean, I don't know
James
how much is the narrative and how much
Yeah.
is the real thing, but I mean, all technology businesses, there are only two outcomes. Either you dominate the world, your niche completely, or you go bankrupt. There is no middle way. That's the rule of the game. So either you go big or you go home. That's the only two options there is. And of course, if you bet on go big, there's a huge risk that you fail. That will always be there. But that's the nature of the game. It's the nature of technology investment. I don't think he's sitting there and, fumbling away all the money. It would fail only if Facebook, takes over the niche or something like that, or Meta takes over the niche.
Yeah, he also installed a traditional ad exec who is world class and trusted to really, I think her job will basically push advertisements, bring all the old advertisements back. Of course, you're not going to find Ford and General Motors advertising on there on Twitter. Maybe. But everybody else is coming back.
I think so too. I think another threat is that behaviors change. If I'm looking at the subway, if I usually go to the subway to work in Stockholm, and you stand up there in the, stand-up place, you can look over the shoulder what people are doing. Most people, they're watching TikTok or Instagram Reels like this. No one's reading anything. Reading has gotten too much effort for most people. It has to be easier.
So we should feel good about being addicted to Twitter, because at least we're better than those Instagram real guys.
Yeah, so I mean, it's something
TikToks.
like that. If you like the appeal of intellectual medium that Twitter, after all, is. If it doesn't appeal to enough people, I mean, there could be behavioral changes like that. But if you go back to X.com and the target of becoming an everything app, if I just Google it, WeChat has 1.671 billion users, and there's only 1.4 billion population of China. So of course they use it in a few more countries, but it's like an app that basically everyone uses for everything. You want to, whatever you want to do, you bring up this app and you use it. And we don't have that in the West. And I'm being surprised that we don't have it for at least 10 years. And I'm sure Elon Musk also see the same thing. We're behind. We don't have that kind of good user experience that has existed for a decade in China. So that the opportunity for the everything app is there, where the Twitter can, attract those people who are today sitting doing TikTok and Reels. I don't know if that's appealing enough, or if you need to have some other thing to reel those people in.
Yeah, so we're going to be following this thing, guys, with Solana, with ETH, with security topics that we discussed, also with Elon and X.com. Let's speak a bit about alts before we round this off. I did see a donation in the past about ICP. Someone asked about what we think. I mean, personally, myself, yes, I haven't really been following it since they launched. And when they launched, they did not perform very well. But I know you, James, you have a database with all kinds of metrics for for any coins. You want to bring that up so we can take some questions from the chat about alts and see the situation?
Sure, but I have to warn you, 90%, 98% of crypto is garbage, so you might not like the news you hear.
That's the problem. Whenever people are always hopeful when they ask about a coin, they want to hear something good, and then James comes and crashes with it.
Well, yeah. Well, ICP, I mean, 68% of the tokens are held by the insiders, which is horrible. They have no adoption, no daily active users, which is a big ding for me. No growth opportunity, very centralized. And the technology is interesting. That's the only thing, but there's lots of interesting technologies out there. as well. So all in all, I mean, if you look at how it ranks in the top 28 smart contract platforms for us, it's number 26. So it's second or third last. So it's not good at all.
And it seems that it just keep getting new lows, right? When you look at this chart, CTO.
Yeah,
like
exactly. So this is one thing I really like is looking at the altcoin versus BTC, because at least to some extent then you filter out the price movements of the whole market. You just look at the relative strength of this product versus BTC, which is kind of a proxy for the market as a whole. So at least on this chart, this was the Coinbase one. No, probably this one has earlier price history. But if you just look at this one, this has basically been in a downtrend and still is in a downtrend. But there is some positive news. If we look at the very short-term time frame, there is kind of a bottom pattern here. If this one managed to break up from here and turn the trend up, could be an entry for fans of this project. But the trend is still down, and that bottom pattern remains a possibility at this point.
And by the way, so I know you are following a lot this market from the perspective of uptrend, downtrend. So what's your current view on the altcoin market overall? Is it still bleeding against Bitcoin?
There are definitely projects that have made a significant change. So if we look at, for example, Solana that we talked about before, that was in this situation, was like a huge bull market, turned down. There is a market structure change now. This one, again, this is Solana versus BTC, so it's not talking about the USD values, but this one did recover very key support and turned trend back up. So there are altcoins that have turned around as of right now. Now, we don't know what will happen in the future, but there are definitely these coins. If we look at all altcoins in total, I was kind of a little bit surprised by the price action. We see this a little bit better if we take a bit bigger candles, but the Bitcoin dominance has been trending up. And I actually thought that Bitcoin dominance would go higher, perhaps up here at the 57% or even higher before it's turning around. But it did kind of get rejected much earlier than I thought, at about 52%. And that rejection is still a fact. It hasn't, picked back up again. So that means that there are definitely altcoins that are rallying against Bitcoin, because this one has been moving down. Doesn't look so much, but in these quite low market cap altcoins, that can be huge multiples. So we have this situation. But, if this one starts moving up again, if it breaks through this one, then I would absolutely exit all or almost all altcoins.
And for the people out there to remember as well, we're 8 months into a bull run, the early bull run. There's no ifs, ands, or buts about that. I'm sure you guys both agree from the data. But ICP is still 99.1% from its all-time high. And a lot of people see that as like, oh, I can invest $1. It becomes $100 because it'll get back to an all-time high. But you want to share some reality about previous cycle coins and how many actually make it after 4 years? The answer is very few. CTO.
Yeah, exactly. I mean, I printed socks for all the people who are taking my course, which says that hodl sucks. So it's hodl sucks socks. And it's not about Bitcoin, but I think the strategy to pick like a favorite altcoin and then hodl that one to the death, that has not been so successful strategy if looking at past history, because most of the top altcoins later they fall out of the top 50 or top 100 chart, and they get replaced by new altcoins which have new and more modern narratives. So that's what it's really about. And I think too many people in this industry, they start with very little money, they make huge money, 100x up, but then they hold it all the way down again, and they might even lose money because when it's down 90%, they feel it's such a great opportunity, and they go in and they buy with new money, fresh money. And then it continues down another 90% because it can go 100x up and 99% down. Okay.
And I love this narrative of new coins, because that looking at the last bull market, that has been maybe the single most important decision to make, to let go of the 2017 bags of NEO, like VeChain, all of these old ones, and be in the new ones, like Solana, like what we've seen with DeFi coins, Matic, BNB, like all of this new blood. So how are you guys looking at it? For example, looking at Solana, what we've been discussing, and looking at other coins that we like since the last bull market. Are you guys looking heavily for the new one, new L1, new L2, or you like what you currently have and you build on your current conviction?
Yeah, always looking, always identifying what could the next big thing be. And there was a lot of hope for things like Sui and Aptos. They were the so-called Sol killers, but their technology is inferior, which is incredible. So you got to be better, cheaper, faster to beat the incumbent of the best, cheapest, fastest chain. And the other thing to look at is, percentage of market cap of ETH and how big it is to determine upside. It's that simple. This game isn't hard. Look at adoption, look at development, look at breadth of dApps, and then you find the answer. That's what I've been doing since 2021.
If you look a little bit at technology history, it is like this, that the leader often stays the leader. So if taking a big bet on Bitcoin, statistically, if we don't know anything about the future, but just if we try to find parallel in technology history, that the leader has a good chance to still be the leader in 10 years. So that's one fact. And that's why I think a bet on Bitcoin or something is positive. But if you're somewhere at position 20 or you're position 10 or something, even position 5, the probability of someone replacing you is pretty big. And that can be someone that comes from out of nowhere. And that it really is the opportunity in crypto, because that guy who comes out of nowhere will then go up 1000x before it starts even challenging the bigger players. And that really is the opportunity. So I become more and more pro-innovation. I feel we don't have all the answers yet. There's a good chance that there will be new projects not even created yet that really come up and challenge the projects in the top 10, maybe in the top 5, maybe in the top 3, or maybe even in the top 2 coins. And I think is a high chance.
One thing that's interesting is this whole like dystopian altcoins. Like, for example, with Arkham, where they have this docs to earn market, or like Worldcoin, where you scan your eyes in order to get some $60 or something. But about Worldcoin, I have seen them getting a lot of sponsorship deals with traditional influencers, so non-crypto. And that got me thinking. Someone mentioned MySpace in the comment section, because that's how it felt with my generation. Like, we never really used MySpace. You just had Facebook become big out of nowhere, and then everyone started to use it, and no one even tried MySpace. And MySpace was dominating the social media market for quite some time before Facebook came. So the question is, can we see something similar in crypto? And is it likely to happen in a similar fashion like with social media? Because social media is also a network effect. But for some reason, Facebook just leapfrogged MySpace. And what we're seeing right now with something like Worldcoin, where they are going so heavily after non-crypto people, and they really have high ambitions to go after the entire world. Although the project is dystopian, and I don't know what you guys think about it, but can something like that in other niches maybe move to earn, which is also kind of easy to get retail in, because you get money for running. So if you run, you can run with Runkeeper or with something else where you earn. So what do you guys think about this real world adoption narrative, and if that can leapfrog, like on an app level, infra level, everything that we know about as crypto natives?
It's so funny regarding Worldcoin. You know, the biggest business now in Kenya is?
Yeah, some Worldcoin aggregate.
Helping Chinese do KYC with somebody in Kenya's eyeballs. Literally, there are armies of people selling this, and they're making $3,000 a day because they're scanning 50 to 100 eyeballs each, and the Chinese are paying for it to KYC in Kenya so they can avoid their local authoritarian system. It's hilarious. Worldcoin is just shocking in every perspective. There is nothing good about that whole thing. And in terms of pay to earn or play to earn or move to earn or anything like that, all garbage. And the tokenomics of every single one of those projects is horrific. You will never get rich on moving to earn, but there is one positive. It does help people get healthier and fitter, and there's no price you can put on that. So from that perspective, it's good.
CCO, what do you think? In general, like, do you think that there could be some use case, maybe it's gaming or something, where we truly hit this middle ground, this use case where you don't even feel it's crypto, where people don't care about layer 1, layer 2, oh, it's on Solana, or oh, it's on ETH. They just use it. Just like when I remember when I was like 11 or something, when Facebook became massive. Like, we didn't discuss, is it better than this? It was just where everyone was. It was a no-brainer. It wasn't even a comparison that much. Can that happen to the current crypto ecosystem?
Absolutely, 100% can happen. Yeah, crypto is much smaller in total than we think, or than it feels like when we're in it the whole time. But it's not that many users. So whoever cracks the vehicle to mass market adoption, that can, swipe the whole field, or sweep the field and win here. Absolutely. 50 million users or 100 million users, something, that's nothing. So if someone can come in from the side and get 1 billion users, 2 billion users, yeah, probably, they have control then over which chain and which technology will be used. So absolutely it can happen. With Worldcoin specifically, I feel that, the idea with SIM card was a lot better than this idea with the eyeballs. I don't like the idea at all. I just like James highlighted, it doesn't really solve the problem anyway.
No, and you can scan your pet's eyeballs too as well. So it's
and there's like other problems with it. Okay, yeah. So what about tracking then? Apple has worked so much to try to prevent tracking, and the problem of connecting everything to one ID that you can never refresh. That's tricky. I think the privacy nightmare here is enormous. Even then to say, okay, but we will have derived IDs and so on and so forth, but I just foresee problems.
Yeah, the dystopian future is that you need to scan the eye to log in, to buy food, to anything. So that's absolutely why it is.
And that means that there will be one key then to everything you've ever done everywhere, ever. And if that leaks, then everything you've ever done in your life is public.
On that note, on that cheerful but yeah, guys, we discussed a lot today, from macro to altcoins to Bitcoin to Japan to everything. It's been a very dense episode, which is fantastic. Any final words on everything we discussed? Any message to our audience?
I have two big thoughts that actually I think we can think about, we and all the audience can think about until next time. I saw a snippet of a podcast with a guy who has written Sapiens, A Brief History of Humankind. It's one of the most insightful books I've ever read. So if someone hasn't read it, maybe read it until next DCA. And he talked specifically about Bitcoin in this episode. He said that all money is a shared myth anyway. As long as everyone believes in the US dollar, it works. If people stop believing in it, it doesn't work anymore. It's the same thing with Bitcoin. And it's really about how many people believe in that narrative. And he said that there's quite many people who believe in the Bitcoin narrative, especially now after all the screw-ups that have been in the banking system. And so it's really what it is. It is what you have talked about many times, Elon. It is the community. It's like how many believe in something. That's perhaps what really counts. And how do we take that insight into Bitcoin? How do we take it into trading altcoins and everything else? Is this, a shared myth? And it's about how many people believe in it and to what depth. That's one thing.
Is that the book by Harari?
Exactly.
Yeah, exactly. Yeah,
Yeah,
that's right.
okay.
Yeah.
Make sure people can find it.
And the second one that I thought about is that if AI is coming now, that's going to be more and more difficult for a lot of people to add value to society. I think people who are today have, a pretty good office job, and white collar job, well-paid office job. Many of those going to be replaced by AI, and it's going to become two segments instead. It's some few people who can add exponential value using leverage of money, audience, software, crypto, all kinds of things, and AI, and be able to add exponential value. One person can, like Elon Musk or something like that. That's going to be a lot of people who can still add a lot of value, because AI will not replace a coffee shop waiter or something like that. But a lot of people in the middle maybe find themselves in more and more difficult situation. And that could, what we see in parts of the world, like California, there's more and more violence, there's more and more car thefts, it seems, and people are doing less and less. Could that be a precursor to what's going to happen? And all these kind of dystopian things, perhaps we need it in the end, or will the world, collapse into more and more violent crime, and because we're getting bigger and bigger social problems? Or do we need to move into more, socialist mode where we take care of people? Or do we need something like Worldcoin to, keep the future violent masses under control? Is that the future? Or what will happen if we, try to think 50 years into the future? Where will society be? And can we use those insights to understand where technology, society, markets will move? It's something that I've been thinking about.
Oh yeah, I haven't stopped thinking about it since November last year. Will it be utopia or dystopia? That's the answer, and I'm working on a video around that as well right now. But I just want to share one last image before we go, Ivan and CTO. This is history of August for Bitcoin between 2011 and 2022. It flatlines. So everybody, go to the beach, hang out, go see CTO in Hanoi. We don't expect big things to happen. And following August, the nastiest month is September for both stocks and Bitcoin. So have your sniping rifles ready. Again, if history repeats, and this is a lot of history summarized in this one little chart.
Load up the Fiat truck, guys, and start backing it up until September. Okay, guys, on that note, fantastic stream. We are 8 minutes over time. Next week, we're back with another stream. This time, where? On James or on CTO's channel?
I can't remember, but I think CTO is you.
Exactly.
Right. I'll be ready.
Follow CTO, follow James from Invest Answers, and smash up the like, and we will be back, guys. Have a good day. Hope you enjoyed, and goodbye, guys. Goodbye.
Thank you, Ivan. Thank you, CTO.